Hey everyone, welcome back to WealthLab Strategy Trading. It's Glitch and VK talking about our trading and what's going on in the markets, what trading systems we're using in WealthLab. And last time we talked about a variation of the 1% a week strategy, which looked pretty
Yeah.
good, and we adopted it in our meta strategy. So we've got it running here. Here's a reminder. This is our equity curve with this variation. So one thing we had some feedback on YouTube is that what about prior to 2010? So this 1% a week trades on triple leveraged QQQ, which started at around the year 2010. So what about before? What if there was a TQQQ before 2010? How would the strategy have done, and would it still be worth trading?
I don't know. We could probably transfer it to something like QLD or QQQ.
Well, here's
Um,
here's what the here's what the person on YouTube said they did. They said they generated some triple leveraged data based on QQQ and then ran the strategy on that generated triple leveraged data. And it wound up losing over 90% of its equity.
so I actually said something similar. So yeah, that's interesting because it's interesting that you lost 90% and it never recovered. I mean, if you look at the last 10 years, 15 years,
So,
it
so
should
yeah,
return, right?
I went ahead and created a WealthLab strategy that generates triple leveraged data from a source symbol and then saves the file to an ASCII dataset. So I went through a couple of different incarnations of generating this triple leverage data. And first I tried ChatGPT, and the code that it gave me actually worked, but it resulted in data that was where the bars did not fully like reflect the highs and the lows. So the way it was generating the triple leverage data was like kind of creating bars that were too short, and that actually wound up not doing good in back testing. But I came across another method to generate the triple leverage data, preserving like the full range of each bar. And then I ran it on QQQ, and I'm going to post this strategy in my Patreon so people can first of all get this. But then I ran this strategy on QQQ for all data, and then I created a new data set in WealthLab using ASCII and navigating to the folder where I saved that triple leverage data that was generated from that script. So I have it here now as a new data set under this folder triple leverage. So I have now triple leveraged and I have QQQX3. So if I double click that, you can see it's has a similar, kind of dynamic to TQQQ. Let's see kind of how well it matches. So let's go to TQQQ. So let's look at this big green bar. And TQQQ this day was a 35% gain. So let's now go to our generated data, and this bar is like a 36% gain. So it's like very similar, the differences. So this method of triple leveraging the data while preserving the height of the bar ranges lets us get a simulated TQQQ, like all the way back to 2000.
That's cool. I mean, that's amazing. So, um, yeah, but it goes down to 40 cents or something. Did I see that right just now? Went all the way from $40 to
Yep.
just 40 cents.
Mm-hmm.
Hmm,
Exactly.
pretty
I mean, we can
interesting.
let's look at it in a like maybe a monthly range. So yeah, so we've got like the huge swings. But in the beginning, yeah, Basically had this big crash here. Big
Yeah,
crash in 2000.
that's, that's the crash in 2000. Yeah.
The dot-com bubble bursting. And then here we have the financial crisis. So yeah, we have a couple of major crashes. So should we run Guy Fleury's 1% a week variance on this triple leverage data? See how it
Yeah,
does?
let's have a look.
All right.
So let's
So
go back. Yeah.
so we've got it open there. Let me open up another copy of it. All right. So we'll tile these. So this is the on the actual TQQQ. First of all, I'm going to run this on QQQX3, and I'm going to run it on 2010 onwards, so the same range as the actual TQQQ, just to see how well it compares on the generated data. So on the generated data, the strategy wound up with a 46% annualized, whereas on the actual data it was like 44%. So it's pretty close, very closely in line.
Yeah, show the other one again. I want to see the first 2 years, whether it looks similar there in the equity curve.
There we go.
Yeah, looks pretty similar.
Yeah,
Yeah,
it does. So
yeah,
now
cool.
let's run it on all data. Let's see what we get. So here's the result. So yeah, we have a major like drawdown here, and then it actually finally did recover, and it winds up with about a 10.7% annualized return after all of that.
Well, that's a strategy that really tests uh, your belief in the strategy. I mean, this is really. I mean, it's really close to $1,000, I guess, huh? Where is it? What's the lowest low there at the drawdown in 2008? Maybe
hmm
it
So
was.
how far down does the equity get?
Yeah.
Yeah, this is like 2000 here, 1700. Goes down to like $1,700 there.
Wow.
But
So
then
if
it
you would
then it recovers
if you would
everything.
have invested if you would have invested $2,000 in 2007 or eight, you would have been a millionaire now. That's a number.
So
But who?
the question is, would this still be worth putting into our meta strategy? Kind of knowing this, you know, uh, had such a huge decline in the beginning. This is with 100% of equity. In the meta strategy, we use 5% of equity for this system. So I was thinking, let's try running this in the meta strategy on all history using the generated triple leverage data. What do you think?
Yeah, let's give it a try.
Okay, so let's go to our meta strategy percent of equity. And maybe we open up a couple of instances of that. We'll first run one of them with the normal TQQQ symbol, which will effectively include data for the past or from 2010 onward for the strategy 1% a week Rev 2. All right, so here is our result running our meta strategy from the year 2000 onward. And it's giving us an annualized return of 20.5%. Here
That's
is
even
our,
more than before.
sorry?
Wow. That's even more than earlier when you. Well, now
Yeah, I mean,
this
we
is a huge.
typically we run it over the past 3 years, but yeah, this is like the full long-term picture from the year 2000 onward. This is all with survivorship bias free data. You're able to test that way in WealthLab without any extra coding or any extra effort with our wealth data sets. So here is the basic results. So now let's run the same thing from 2000 onward, but let's change the symbol that 1% a week uses from TQQQ to the generated triple leverage data, QQQX3, which has the full coverage. And let's run that. Okay, so here's the result. We have a annualized return of 20.6, and let's see, that compares to 20.5. So we actually have a slightly higher annualized return. Our equity curve looks pretty much the same. So I think that's a good news. It didn't drag the result down much using the triple leverage data, and it even ultimately improved it. What I
Yeah,
would,
and
yeah, go ahead.
I'm thinking, why did that happen? And I have a little bit of an idea.
What I want
Um,
to look at are the profit curves. So let's do this here. So here we've got the original with the triple leverage data. Let's look at our profit curves of the meta strategy, and we've got 1% a week is this, kind of tan colored one here. So if I zoom in onto the graph in this area here, let's see. Yeah, we see that 1% a week kind of starts trading like right here at 2010. You see it down here, kind of like
yeah,
dipping down a little below zero, and then it starts making some money, and then it starts, going up. And then by the end of the period, it's like right here, like it's the third most highest contributor to the profit of the meta strategy behind WS Knife Juggler and T triple X deterministic. So let's look at the other window now. So this is the one with the generated data. So if we look at our profit curves, we can actually probably zoom into the very beginning of the data. And yep, so now the 1% on the generated triple leverage starts going into this drawdown, like right in the beginning, like we saw in the main equity curve, but because here we're only giving it 5% of the equity pool that all of the meta strategy is generating so far, the downside is much more limited. And then as we kind of scroll forward, like through history, we then finally reach like this break even point, like at 2005 with that strategy. And then here in 2007, in 2008, we have our financial crisis where it suffers, quite a bit of drawdown, but then it's able to recover. And as the overall equity in the meta strategy rises, the 1% a week then, really kicks in and starts contributing just like it did in the previous, original version. It winds up being the third largest contributor of the overall profit.
no, that's an interesting view and an interesting result. I'm quite amazed about it. I mean, it kind of makes sense because the overall, all the other strategies sort of produce profits. So the 5%, when it kicks in, the 5% starts at a much higher level. It's already a couple of millions, and
Exactly. Yeah.
then it makes a lot of money there in dollar terms. So yeah, quite interesting.
So would you include it in your trading plan for your
Yeah,
collection of
at
strategies?
that level, yeah, yeah. Why not? Yeah. I mean, if you look at the equity curve, it's wonderful.
Yeah, I
It's
think
just
we'll keep it in the rotation, and I will publish this strategy for generating this triple leverage data to my Patreon, and I think we will go forward with it as it is. And what about next in line for the series? Think you have some ideas for some strategies that you want to talk about? See if we want to include them?
Well, this open range breakout system that I think I did a video or I wrote an article about. It is interesting, but it has some some how can I say? It has some features in it that I don't like. But it is definitely worth it looking at, and maybe it might work for some similar symbols or for some, because it is based on URNM and the ETF, and it could be maybe a solution if you use ETFs that have more volume. My
Okay.
opinion, it's
So
definitely something we can look at.
we'll take a look at that next time then.
Yeah, I think it's and even if you learn not to take it.
All right. Sounds like a plan. So that's it for this
Okay,
week. Thanks for watching, everyone.
thank you, everybody. Oh, and don't forget, test smart, trade smarter.
Sounds good. All right. Take care, everyone. Bye.